Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always with the University of Missouri's Ben Brown. Ben, how are you doing?
Hi, Will. I'm doing well. We are in finals week here at the University of Missouri. My students had their test this morning. So, as you can see over I guess it would be my right shoulder. I don't know what it looks like on the camera. Whatever shoulder this is right here, that's the stack of tests
There you
that I
go.
have to grade this afternoon. So,
Yeah, get those all knocked out nice and neat and on time, right?
that's right. That's right. My goal is to get them done today, actually. I've only got
Yeah.
a few left.
And while I'm not currently in Missouri or at the University of Missouri, got my little MU MU logo on here, so still showing support.
Well,
But
based on the palm tree there behind you, I could have swore you were at the lake.
yeah, obviously it's like the other. No, I'm down in Austin, Texas for the week, so nice little quick trip down here, and then we'll be headed back north here tomorrow morning. So looking forward to that. But Ben, talking about heading north, we saw some soybean prices head north this week. Let me give a full rundown of the market recap here. For March corn futures, 24 futures down 4 cents in the week at 481. December 24 corn down 3 cents at 510. Soybeans for January 24 up 30 cents at 1336. That November 24 contract up 15 cents at 1288. Soybean oil on a cents by pound basis for January was pretty well flat, 51.24. Soybean meal on the short ton for January up 490 at 413.20. The 2023 March wheat, or 24 March wheat down 11 cents at 609. That 24 July wheat crop down 18 cents at 625, and then that January crude oil contract down $1.87 at 71.73. So Ben, some light losses on corn, and then soybeans. They made some strong gains to close out the week long stint there. What are
Sure,
your
and
thoughts on that?
yeah, and most of that was on Monday of this week when we opened trading for the week. That was kind of the biggest part of the gains because we were flat, and then we saw it shoot up Monday after rains across most of central and northern Brazil were scattered enough to continue to cause some concern.
Well, and it's kind of interesting looking at that South American picture. We're seeing some really heavy wetness in other areas, some dry pockets in others. So I think it's going to be a continued, point of interest, obviously, as we move forward, watching how weather might quickly impact the market one way or the other, looking at soybeans especially. But Ben, we got some reports that we just got to process last week, looking at some close to end of year reports. The December WASDE, well, it's not the last one for this session. That comes out in January. We did get an update there, but not a lot of surprise coming in from the USDA on their supply and demand estimates. There was really, almost no change as we noted in an earlier discussion. So really, I'm assuming that didn't really have much of an impact onto the market one way or the other.
Yeah, so this is arguably probably the least important of all the USDA reports we get throughout the year, and there's a number of reasons for why that's the case. Probably most notably is this is the first month after four where we don't get updated. We don't get updated production numbers from the United States. So that all come in January until we get a set production number. That's what drives some of the demand categories and so like there's not a lot of movement there, and then South America, it's just not far enough along in their growing season to really get all that concerned one way or the other yet, right? So that's kind of why December tends to be a case of lackluster moves, right? And that was certainly the case this year. We did see some demand increases for corn. Corn and wheat both increased exports by 25 million bushels. For wheat, that increase was driven by a 30 million bushel increase in soft red winter wheat exports, and that more than offset the decline that we saw in the white wheat category. The U.S. wheat carryout for 23-24, so that's our current marketing year, was reduced by that 25 million bushels because there was no other changes. And so I'm going to say that that's bullish to the market to some extent because the market wasn't really anticipating any wheat changes, right? So that kind of teed up that wheat complex to maybe gain a little bit of strength or to find at least some footing under it to kind of justify that little rally we saw over the last couple weeks. But outside of wheat, that was really the only notable thing in this December report.
Well, Ben, setting up how this December report, it was a little bit lackluster as to be expected with most of these December reports. How are we set up looking into the last report coming out next month? Maybe we get some more information on where South America sits. How do you see the market feeling as we move forward into next month's report?
Sure. So, when we go into the holiday season, Christmas and New Year's, the markets are going to be rather thin. We're not going to see a whole lot of trading during that period of time. But how we come out, or how the market comes out of the holiday season to start the month of January, I think is going to be really, really important as we head into those January reports there, the second week of the month. Couple of things that I think could happen, right? Depending on how this weather situation plays out in South America, I could see a scenario where we're building in weather premium into January, only to, again, potentially see where we're at. But I could see us building in some weather premium and then be a little
Scaling back from there.
disappointed in some of the
Yeah.
revisions there, right? And as it relates to South America, a lot of private companies still put out updated production numbers in December. And we did see almost everybody across the board reduce South America corn and soybean production, right? So even though USDA really didn't make big changes, they made a couple of small changes on the margin. Brazilian soybeans, for instance, were down 2 million metric tons. That's still a record for Brazil soybean production. But we saw nearly everybody acknowledge that the growing conditions just have not been ideal. The crop's a little bit stressed. We're probably going to hear a lot of debating, very similar to what we get in the Midwest when the last 2 years, where parts of the region are seeing record production potential and other parts of the region or the country are seeing some challenges, and how those two balance each other out is going to be really important. That's not unlike what we see here in the United States. And I think that's what's going to drive us into January and those January reports.
Well, and Ben, as you noted, the end of the year, you get a little bit more sparsed out with the holidays and everything. So some of the news items might be a little bit slower to come in. One of the things we do have coming into this week is the Federal Reserve set to meet tomorrow and Wednesday. So if you're watching this on Tuesday and Wednesday, looking at the discussions, there's not really an expectation for anything shocking, no real adjustments there. So assuming that meeting doesn't reveal anything out of what's expected, you don't imagine the market will respond overwhelmingly in any certain way. So what does this meeting really mean for the markets at all right now?
Yeah, so it would be a major shocker if the Federal Reserve increased or decreased interest rates, right? Like that, to do anything at all would be a major surprise. And that's not to say that we won't see markets react to the Federal Reserve's presser this week. Where I think we could see the markets react is listening to Jerome Powell, the chairman's press conference, as he talks about long-term, or the long-term outlook for this benchmark rate, right? And what do I mean by that? Well, before this week, the markets were pretty confident that we would see a rate cut in March. After a few data points at the end of last week, and then even at the beginning of this week, showing that the U.S. economy is being rather resistant, and the job market is starting to heat back up again, right? We're starting to see wage inflation. We're starting to see lower unemployment, right? The labor market seems to be moving in the opposite direction that the Federal Reserve would like to see it, to justify rate decreases. And now the market is starting to bank in the first rate cut in May, right? So we're already starting to see that back up. And my personal bias is that we won't see a rate cut till the end of 2024, even if then, right? So that's where we could see some surprises in terms of expectations around the 12-month or even longer time horizon.
Well, and kind of leaning back onto your quoted bias there, you'd imagine that looking at how they've handled the rate hikes steadily, increasing them and being very direct on saying what they're going to do with their intentions, you'd almost imagine they'd be somewhat cautious or slow to remove that or come back down.
Yeah, absolutely, absolutely. And I think the Fed has been very clear about what they wanted to do, and kind of their targets, I guess, if you will. The market didn't believe them. The other thing that I think's been of interest is the Fed is now starting to talk about how monetary tightening is working. It is becoming restrictive and slowing the economy, and I would agree. I think we've seen that in parts of the economy. The challenge right now is I think with the holiday season, we're really seeing that job market start to heat back up. The data that came out last week that was for the October jobs report, I think really probably showed that this economy at all stages, not just government jobs, but even in the private sector, is showing some strength.
All right, Ben. Well, as we move forward into this week, we do have some reports that we need to watch. So, what should farmers and ranchers really be paying attention to?
Well, so we'll have that Fed presser, that Federal Reserve press conference on Wednesday afternoon at 1:30. We have a bunch of normal reports that we talked about, but then Friday we have that National Oilseed Processors Association report at 11. It's coming off an all-time record high last month, so we'll see if the momentum can continue.
All right, Ben, it's always a pleasure. Thank you for all your information and knowledge. Viewers and listeners, if you'd like to learn more about us and what we do, you can check us out at brownfieldagnews.com, where you can also find our sister program, the weekly livestock market update. Ben, thanks again. I'm Will Robinson on Brownfield.